You hear the term reparations debated constantly. Right, it's been around for ages. But often the discussion kind of stalls on, well, is there a debt? Is it quantifiable?
Exactly.
Our deep dive today, though, focuses on a specific collection of sources that move way past that initial question. They say, yes, the debt is absolutely real.
Hmm.
And they've done this incredibly detailed work tracing the actual flow of capital to argue precisely who the debtor is today.
Yeah, these sources aren't treating slavery as just, some terrible event in the past. They frame its economic legacy as this ongoing active transfer of wealth.
Okay.
Something that really defines American economic power even now. So what we want to do is unpack their central, and it's definitely provocative, argument
Which is?
that the United States is currently a debtor nation to the descendants of American slaves. And critically, they argue this debt isn't just on the government. It extends to major corporations, finance, even immigrants who arrived long after 1865.
Whoa, hang on. That's a huge claim. The source is saying almost everyone whose family wasn't enslaved potentially owes this debt, including, like, today's Wall Street giants.
That's the core argument, yes. They focus on the mechanism of wealth transfer. The idea is the capital built on stolen labor, it wasn't destroyed, it just moved, it was transferred.
Okay.
So to show you how they map this out, we'll walk through their roadmap. First, the foundations of American finance, Wall Street, corporate America.
Oh, right.
Second, how that money then financed the country's physical growth, the infrastructure.
Got it.
And third, the role of academic institutions in sort of providing the ideological framework for it all.
Okay, let's dive in then. Starting with, well, what the sources call the literal foundations. Wall Street, we usually think South, agriculture, cotton.
Right.
But these sources really zero in on New York City.
They definitely push back on that common narrative. The documentation they present suggests New York's debt meter, let's call it,
Yeah.
started ticking way back in 1626.
1626.
Yeah, when the first enslaved people were brought to Manhattan. And get this, by 1730, the sources state 1 in 5 New Yorkers was enslaved.
1 in 5 in New York.
Yep, giving New York City the second highest percentage of slave owners per capita in the country, higher than many big southern cities, even places like New Orleans at the time.
Wow. And the sources talk about the actual physical Wall Street, too.
The actual wall, the fortification that Wall Street is named after, built by enslaved people, according to the historical record cited.
To defend against the British and Native Americans, right?
Exactly. And later, that same area housed a formal city-sanctioned slave market for over 50 years, from 1711 to 1762, generating tax dollars for the city.
So the connection is direct from the start. What about the stock exchange itself, the NYSE?
Well, when the NYSE was founded in 1792, the sources argue its seed money, its initial capitalization, came directly from slave trade profits.
How so?
They point to figures like Thomas Willing, founder and first president of the First Bank of the United States, a key figure in early finance. The sources identify him as a major slave owner whose shipping company was heavily involved in the slave trade. He apparently used those profits to invest significantly in the brand new NYSE. His partner, Robert Morris, another big name, also a slave owner, did the same.
So the foundation of the banking system itself is implicated.
That's the argument.
Right.
And it moves right into major companies we still know today. The source material really highlights the insurance industry.
Insuring what? The ships?
Insuring the people. They were insuring the enslaved individuals as property for Southern planters. New York Life, for example, founded in 1841 as Nautilus Mutual Life Insurance.
Yeah.
The sources claim they made a killing insuring slaves. It's really interesting here. Slave policies, according to their own records cited in the source, made up about 1/3 of New York Life's total business early on.
1/3. Wow.
Yeah, and they weren't shy about it. Apparently, they advertised heavily in Southern newspapers. The sources also name AIG, through a subsidiary U.S. Life, and Aetna as being involved in this practice too.
Okay, but New York Life, Aetna, they're still around. How does that historical involvement translate to a current debt, according to these sources?
Right, that's the critical transfer mechanism they focus on. The argument is that the major banks you see today, Citibank, Bank of America, Wells Fargo, JP Morgan Chase, they all acquired smaller predecessor banks over the years. And the foundational wealth, the actual assets of those predecessor banks, was generated directly from profiting off slavery. So the money wasn't like wiped clean in the acquisition. It was absorbed, synthesized into the larger entity.
And the example they use for this is Lehman Brothers.
That's a prime example they detail, yes. Lehman started as just a dry goods store down in Alabama.
Right, I remember that.
They accepted cotton, slave-picked cotton, as payment. Records show Meyer Lehman owned 7 slaves himself in 1860.
Yeah.
That cotton money, that initial capital, was then parlayed into underwriting firms, which eventually led them to found the New York Cotton Exchange in 1870. When Lehman Brothers, or firms it seeded, were later acquired or merged, that original capital, derived from slavery, became part of the acquiring institution's balance sheet.
So the argument is it's not gone, it's just embedded deep within the modern financial system.
Precisely. It's arguing that the system is, in a very real sense, capitalized by these intergenerational transfers of stolen wealth.
Okay, let's shift gears slightly from the financial profits on Wall Street to how that money actually built things, the physical expansion of the U.S.
Right.
The sources connect this through the use of enslaved people as essentially financial instruments, slave mortgages.
Yeah, it's kind of stunning how sophisticated financially this system was. Enslaved people were literally used as collateral for banknotes. The sources bring up Thomas Jefferson,
The founding father.
who apparently mortgaged 150 of his own slaves just to finance building Monticello.
But these weren't just like personal loans between individuals, right? You mentioned Wall Street.
Oh, absolutely not. This went global. These mortgages on human beings were bundled together, packaged into bonds.
Like mortgage-backed securities today?
Sort of the horrifying 19th century
Yeah.
equivalent, yeah. And these bonds were sold internationally,
Right.
especially in European and British markets,
Why were they so popular there?
because they were seen as incredibly secure investments. The sources state the rate of return on an enslaved person's labor could be as high as 13%,
Wow.
which was way more attractive than, say, the 6 or 8% you might get from railroad bonds at the time. So it shows this wasn't just an American issue. It was financed by global capital actively seeking profit from slavery.
And this financing method was even used for huge government actions, like the Louisiana Purchase.
That's what the sources claim. The U.S. government didn't have the cash up front. The deal was financed by Baring Brothers, a big British commercial bank. And Baring Brothers, the sources note, was already making huge profits from the Caribbean slave trade. They then apparently doubled down by bundling U.S. slave mortgages from planter groups in Louisiana, for example, and selling those bonds to their European clients. Massive profits for international finance, all tied to U.S. expansion built on slavery.
Let's bring the infrastructure closer to home then. Railroads. The source argues they were crucial for maximizing the profits from slavery.
Yeah, moving the cotton and other goods produced by enslaved labor much faster. Southern slave owners were major stockholders in these railroads.
And the companies themselves owned slaves.
Some did, directly. The sources cite Wachovia, well, a bank acquired by Wachovia, the Georgia Railroad and Banking Company, as owning at least 162 enslaved people itself.
But the source also points to massive government support for these railroads, right? Not just private investment.
Oh, absolutely. A fascinating point they make is about government favoritism. In 1832, Congress apparently gave railroads a special waiver on iron tariffs.
A tax break.
A huge one. It let them buy English iron for about $50 a ton instead of nearly $200 a ton for American steel. A 75% saving, basically subsidizing the railroads that underpin the cotton economy.
And state governments were involved too?
Even more directly sometimes. Using Louisiana again as a case study, the sources detail how the state government went all in, underwriting loans for railroads, granting them monopolies, tax exemptions, using eminent domain to seize land.
Yeah.
And the sources note the Louisiana legislature even owned its own enslaved people, Negro laborers, who were forced to build public works and then rented out to private railroad companies.
State-owned slaves building private infrastructure.
That's the picture the sources paint. And when you talk about who actually built these rail lines, especially in the South and East,
Yeah.
the sources make a very strong case that it was primarily black labor. Forced black labor. They estimate nearly 10,000 black people annually were forced into this work.
And this was before the big waves of Irish or Chinese laborers we often associate with railroad building.
Decades before, according to the sources. Those groups primarily worked on the transcontinental lines out west much later. This early foundational network in the slavery-dominated regions, built by black hands.
That's incredible.
Yeah, and the work was unbelievably brutal. The sources mentioned the Gandy dancers, that term for the black railroad maintenance crews.
Right, I've heard that.
They had to physically move and realign those incredibly heavy steel rails, often working in unison, chanting or singing to keep rhythm. It kind of speaks to the immense force strength that built that infrastructure.
Okay, so we've traced the argument through finance, Wall Street, and infrastructure, railroads, bonds. Now the third pillar in the source's argument, academia. the institutions that shaped ideology.
and holds staggering wealth today. Right. This is a critical link in their argument. These places didn't just, passively receive donations. They actively provided the intellectual scaffolding to justify racism.
Like our
Harvard is a major focus. Multiple early presidents were slave owners. John Hancock, a big name associated with Harvard, owned thousands. Harvard Law School itself, built in 1817 with funds from the estate of Isaac Royal Jr., whose family fortune came directly from the slave trade.
And Harvard was involved in actually promoting racist theories.
Directly, according to the sources. They highlight Harvard commissioning photographs and 1850 pictures of enslaved individuals like Renty and his daughter.
Why? What were the photos for?
For a professor named Louis Agassiz, he used them to push his theory of polygenesis.
Which is?
The now totally discredited idea that black and white people were separate biological species. It was scientific racism, designed explicitly to provide an academic justification for white supremacy.
And Harvard still has these photos?
They do. The source notes Harvard still owns them and has used them commercially, despite ongoing legal challenges from the descendants of Renty.
Unbelievable. What about Yale?
Yale's another central example. It's literally named after Elihu Yale, who, the sources state, as governor of Fort St. George in India, oversaw the sale of hundreds of people into slavery. Early Yale buildings, like Connecticut Hall, were built using enslaved labor. And the colonial government gave Yale tax revenue derived from slave-produced sugarcane.
So direct financial benefit again?
Yeah.
But also ideology.
Absolutely, through very influential alumni like John C. Calhoun.
The former vice president.
Yeah, he famously argued in 1837 that slavery wasn't just necessary, it was a positive good. He claimed it was the most solid and durable foundation for free political institutions because, in his view, it solved the conflict between labor and capital by enslaving the laborers.
And Yale memorialized this ideology.
They built Calhoun College in 1933. The sources describe stained glass windows that originally depicted a shackled black man kneeling before Calhoun.
Wow, 1933.
And the source goes further, arguing Yale became a major center for the eugenics movement. Yeah. The American Eugenics Society was founded at Yale in 1926 by faculty members, including a prominent economist, Irving Fisher, who also co-founded the Race Betterment Foundation with John Harvey Kellogg. Yes, the cereal guy.
So the argument connects the money. I mean, Harvard's endowment is over $50 billion. Yale's over $40 billion.
Right.
It connects that wealth not just to historical benefit, but to the creation of the racist ideas that justified the whole system, ideas taught to generations of leaders.
That's exactly the connection the sources draw. The money is still there, they argue, in those endowments, compounding. And it's tied directly to the institutions that provided the intellectual framework for racial hierarchy.
So the source doesn't just stop the clock at 1865 at abolition.
Not at all. A huge part of the argument is that the debt accumulation continued, and the U.S. government actively stepped in to reinforce the wealth disparity after the Civil War.
How? Starting with the 13th Amendment itself.
Yes, that infamous loophole.
Yeah.
Except as a punishment for crime. The sources argue this clause essentially allowed slavery to transform. It became, quote, a public sector institution. Think chain gangs, convict leasing, the foundations of the prison industrial complex, all providing free or near free labor that continued to build wealth for states and private companies.
And then came the end of Reconstruction, the Compromise of 1877.
Often called the Great Betrayal in these texts.
Why betrayal?
Because, functionally, the North and South reunited based on an agreement to uphold white supremacy. Federal troops were pulled out of the South. Crucially, laws that were meant to protect black citizens and their progress, like the KKK Act of 1871, were just deliberately ignored by the federal government.
So the government actively allowed the rollback of rights and safety.
That's the argument. Cementing the government's role, according to the source, in enabling continued oppression and, very importantly, the denial of wealth accumulation for black communities.
And this pattern of government action reinforcing white wealth, the source argues, kicked into high gear in the 20th century, even using programs funded by all taxpayers.
Especially with the GI Bill after World War II. This is a huge point in the source material.
How so?
They argue that black veterans, despite serving and paying taxes just like everyone else, were systematically, categorically denied the benefits of the GI Bill.
Benefits like?
Education funding, yes, but critically, housing loans and business loans. The VA backed something like 40% of all home mortgages in the couple of years right after the war.
Which basically created the white middle class and the suburbs.
Exactly. And the sources argue this required discriminatory practices, like government-sanctioned redlining, to ensure that this massive wave of federally backed wealth flowed almost exclusively to white families, actively excluding the black veterans whose sacrifice helped fund it.
So the source isn't saying the suburbs and the ghettos just happened.
No, the argument is they were both engineered, intentional outcomes of selective federal policy, a deliberate, turbocharged redistribution of wealth away from black communities and towards white communities.
And this continued even later.
The final piece they often cite is urban renewal, starting in the post-1960s era.
Often called slum clearance.
Right, but the sources frame it more aggressively, sometimes using terms like ethnic cleansing. Federal money allowed cities and even universities like the University of Georgia seizing the black neighborhood Lindentown, allowed them to seize land owned by black families, often paying far below market value under the guise of renewal. This deliberately displaced families destroyed accumulated property wealth and pushed people into deeper poverty or forced relocation, while the cleared land often became valuable real estate for the city or institution.
Okay, so let's recap the argument we've unpacked from the source material. The debt, they claim, is owed by Wall Street insurance companies.
Right, the financial sector.
The infrastructure builders, the railroads, the international bondholders, the academic institutions like Harvard and Yale that provided the ideology.
And hold massive endowments tied to it.
And crucially, the federal government itself, through policies after 1865, like ignoring the KKK Act, the discriminatory GI Bill, and urban renewal.
Yeah, the absolute core assertion across all these sources is that the stolen wealth, the value generated by centuries of unpaid labor and subsequent discriminatory policy, it didn't just evaporate.
It got transferred.
It got transferred, it changed hands through mergers and acquisitions, it funded endowments, it built infrastructure, and it remains fundamentally within the institutions, still operating and benefiting today.
Which is why, for the sources, just an apology or a statement doesn't cut it.
Exactly. They argue it's meaningless without concrete financial amends that actually address these specific, traceable, institutional debts. The capital is identifiable, they argue, so the remedy must be financial.
Thank you for walking us through that complex argument. It's a lot to take in.
It definitely is.
Yeah.
And it leaves you with a pretty challenging thought based on their own logic. If, as the sources argue, this massive wealth transfer and disparity was achieved through specific federal policies, things like the GI Bill, redlining, urban renewal, policies that actively channeled capital in one direction.
Right.
Then what kind of policy mechanism operating at that same federal level would the source logically suggest is powerful enough to actually reverse that engineered flow of capital today? What would it take to undo decades of targeted wealth exclusion?